Okay, everyone. So let's quickly have a look at question 2.9. Okay, so for the guys that have the old textbooks, I've just put a scanned copy of it on the Excel file so that you guys also just can make sure that it's exactly the same information. Okay, so the first thing we had to look at is they asked show to correct the corrected creditors list. So what you would start off with is you would start off with point number 2. Just make it slightly bigger for the screen. Okay, so you would start off with point number 2. So they've already given you the creditors list as at 30 June. So they've already gone and prepared the creditors listing for June with all of the transactions. But now what's happened is there has been some errors that still needs to be reflected. So that is indicated under point number 3. So they tell you the following errors or omissions were noted. So now what you are required to do is to take this opening balance, so the pre-adjusting the balance, and then go adjust it to account for these errors to get to the correct closing balances. Okay, now let's quickly read through the information and then we'll sort of discuss how do you account for each and every transaction. So the first one, they tell you the total of the creditors journal has been overcast by 1,200. Now, if the total of the creditors journal has been overcast, where do you think you will have to correct that error? I'm just going to repeat my question. If the total of our creditors journal was overcast, where would we correct that error? Would the first transaction affect our creditors list or would it affect our creditors control account? Okay, so Tebe thinks it will affect the creditors list. Anyone else? Do you think entry number 3.1, the total of the creditors journal has been overcast? Okay, so Donovan thinks it's the creditors control account. Nabali thinks it's the creditors control account. Okay, so the correct answer is it is the creditors control account. Now, when they tell you the total of your creditors journal has been overcast, that means when we added all of the amounts together, we made an error somewhere, and that total is always transferred into our creditors control account, whereas the individual line items would have gone to the creditors listing. So point number 3.1 actually goes to our creditors control account. Let's just going to write it here on the side. So this one will go to creditors control account adjustments. Okay, then point number 2, they tell you no entry has been made for trading inventory bought on credit from S&P for 4,800, including VAT less 10% trade discount. Okay, now before we unpack all of that information, when we account for an entry in our creditors control, is that amount inclusive or exclusive of VAT? Okay, so let me repeat that. Okay, so Toby says inclusive. What does the rest of you guys think? Will the amount be inclusive or exclusive of VAT? What does the rest of you think? So Toby's given me an answer, but there's more of you in the class, so will our creditors amount be inclusive or exclusive? Okay, Mabali thinks exclusive. Anyone else? You have a 50-50 chance of getting this right. Okay, Nakuviana thinks exclusive. Okay, so remember when we discussed this, this would be similar to your debtors that we've done on Tuesday. When we account for our creditors, that amount should always be inclusive of that, because of the fact that we are essentially paying over the VAT to our supplier, and they will pay over that VAT portion to SARS. So whenever you account for a transaction, whether it's in the creditors list or in our creditors control account, it's always inclusive of that. Where it is exclusive is when we account for the physical asset or expense that we paid for. Then we would show it exclusive of that. But in our creditors control, it's always inclusive because that is the amount that we owe our supplier. Okay, so just make a note there. So entry 3.2, because they say no entry has been made, and they're talking about a specific creditor, you would have to include that amount in your creditors list as well as your creditors control account, because we have not reflected that transaction at all. So that entry there would actually affect both accounts. Okay, so let's look at 3.3. Goods were bought on credit from C. Cornwall, okay, for 6,600, including VAT, and has been entered in the creditors journal as H. Mortimer. Okay, so what happens here is we've actually purchased the good on credit, okay, but we've captured it to the incorrect account. So what that means is your total for your creditors control when we captured it in your creditors control journal is 100% okay, that's fine. However, our creditors listing will be wrong because two of our creditors totals will be incorrect. So this one would affect our creditors list for C. Cornwall and H. Mortimer. Okay, let me just say this creditors list here was for S. Okay, so this one, because of the fact that the amount has been correctly captured, we will not impact our creditors control account because the total would have been corrected. It will only affect the creditors listing by having to move it from the one creditors account to the other creditors account to reflect the correct balance. Otherwise, what will happen is when you get to month end, that creditors total will not agree to the statement that you receive from your supplier because you've captured it under the incorrect account. Then number 4, an original credit invoice. Do you have a question?
Yes, ma'am. I just wanted to ask for 3.3. Does this mean from more time are we going to take out 6.6 and add it to Cornwall?
Yes.
Oh, okay. Thank you.
We'll do the adjustments now. I'm just going through the information and then I'll show you how we adjust it in the accounts. But I first want to explain it and then we capture it. Otherwise, or do you want me to, as we discuss it, capture it on the spreadsheet as well? What do you guys prefer? Should we capture it at the same time, or do you want me to discuss it first and then we capture it? Okay. So point number 4, we said when we get an original credit invoice. Now remember, we get an original from our supplier. If we have a duplicate, we would be the supplier, so it would be our data. So in this case, they tell you an original credit note for 590 was received from S. Zondo, was correctly recorded in the journal. So we've correctly captured it in our creditors allowance journal, but was posted to the wrong side of S. Zondo's account. So that means when we captured it in the creditors listing, instead of debiting the account, because a credit note would have reduced the creditor's balance, so instead of debiting that creditor's account, we went and credited that amount. So we would have to go to the creditors list for S Zondo and then go correct this transaction. Okay, so it's correct in the journal, so that means our control account is 100% correct. It's only when we took it to the individual creditor where we accidentally captured it on the incorrect side, which means when we correct it, we will have to reflect it twice to correct the mistake. Okay, then 3.6, let's look at what that says. They tell you no entry has been made for interest charged at 12% per annum on an overdue account of 18,000 by C. Cornwall on 30 June 2008. The account is 4 months overdue. Okay, so because we have not done an entry for this, we haven't passed a general journal for the interest that needs to be charged to our account or to the creditor's account. Now remember, when we do the interest calculation, it's only for the period that that amount is outstanding. So in this case, the account is outstanding for 4 months, but you will note that 12% is for a year. So per annum means for entire year, which is 12 months. Now to work out the interest, you would have to divide the percentage by 12, then multiply it with the outstanding balance, and then we multiply it with the number of months outstanding. Now, because no entry has been made for this, it will affect both your creditors control account and your creditors list. Okay, and it will only affect C. Cornwall's account because it's only his account that's outstanding. Then number 3.7, they tell you H. Mortimer is also a debtor and shows a credit balance of 800 in the debtor's ledger. Now remember, a debtor is normally a debit balance. Now if they show you a credit balance on your debtor side, that means you actually owe that person money. So they've decided to transfer it from their debtor's account to the creditor's account, but no entry has been processed. Okay, so what that means is now we have to transfer that amount from debtors to creditors. So that would affect both your creditors control, just going to copy this, both your creditors control account, because you will take it out of the total there, as well as your creditors list, but it's only going to affect H. Mortimer's account. Okay, so that balance that we are transferring will then increase our creditors balance in our creditors list. Then the last entry is on 3.8, a check received from a debtor was returned by the bank and marked as RD. The entry was recorded correctly in the subsidiary ledger, but instead of debiting the debtor's control in the cash flow payments, the debit was erroneously passed against the creditor's control and posted as such to the general ledger. Okay, now what this means is instead of taking this RD check to your debtors account where it's supposed to have gone, we've accidentally put it in our creditors control account and posted it to the general ledger. Okay, so this means that would only have affected our creditors control account. It would not have affected an individual creditor. Okay, now let's go through each and every transaction or the different accounts and then we'll reconcile it. So what I'm going to do is I've got both the general ledger account as well as the creditors listing on one sheet. So we're going to start with 0.3.1 and then I'll make the necessary adjustments and then we'll update the information. Okay, so we said the first entry goes to our creditors control account. We said the total of the creditors journal has been overcast. Now, when it's overcast, it was too much. So if we look at the control account, this is what they've given to us. Now, if we talk about, let's just see the wording. The creditors journal has been overcast. Now, generally, creditors journal is our purchases that we make for that month. Has been overcast. So here's our sundry purchases. Now how we will adjust it, we take the 26,000. Now we know it has been overcast. Okay, let me just make it a bit bigger so you guys can see better. Okay, I'm just going to make this red to show you where I change it. Okay, so it was 26 initially, but now we said 1,200 was added. It was too much. So we need to reduce that 26,000 by the 1,200 Rand. Okay, to up that balance. Okay, so we've done the first entry. Let's highlight that yellow. Then the second one, we said no entry has been made. So now we have to account for that entry both in our creditors list as well as our creditors control. Now this is also a purchase that has happened, but now what is important is there was a trade discount. Now remember, when we have a trade discount, we need to adjust the purchase for that trade discount before capturing that amount. So that means when we add it to our creditors control account, we take the 4,800, but we multiply it with 90% because we are removing the trade discount portion amount of it. Now, if you go multiply that, so let's quickly just do the calculation here on the side. Then you get an amount of 4,320. Now that same amount will also be adjusted in ACBP's account. So we add this adjustment amount there. I'm just gonna, so that is where I got the adjusted amount for ACBP. Okay, so let's see who else do we have. So we've covered the second entry. Then the third one, we said the goods was accidentally recorded in the incorrect creditors account. So now what we have to do is it was bought on credit from C Cornwall, but we accidentally put it into H Mortimer's account. So that means when we look at C Cornwall, we have to add 6,600 to his account. And when we look at H Mortimer, we need to reduce his account. I'm sorry, I've got 16 too many there. 6,600. We have to reduce his account by. Okay, so that is number 3. So that's how we adjusted so far. So we can tick that off as well. Now, if we go to number 4, that is where the original credit invoice received from Esondo was 870, and it was mistakenly entered into the creditors allowance journal at 780. So we've recorded it at the incorrect amount. So the invoice was actually 870, but we only captured 780. Okay. Oh, sorry. Yeah, this also needs to have your creditors control account because of the error. Okay. Now, what is the difference between 870 and 780? What is the difference? What is the difference between 870 and 780? Okay, so Bernice, just check your calculation again. It is supposed to be 90. So I think you put in 890 instead of 870. Okay, so it's a 90 Rand difference. So what we have to do now, there's 2 ways of doing it. So you can do the minus 870, so what it should have been, and then you add the 780 to get to a negative 90. Now, how do I know it's a negative 90 and not a positive? Because of the fact that it was a credit note. It means it would have reduced their creditor's balance. But I actually captured it at an amount smaller than what it should have been. So that means I have not reduced my account with the correct amount. If it was the other way around, so if I captured a bigger amount than I should have, then it would have been a positive. So in this case, it's a negative 90. But now I also have to go and account for that amount. My creditors control. So I take the initial 5,600 and then I add the 90 Rand difference based on that calculation. So I add on the 90 on there. Okay, so that is number 4. Now let's move on to number 5. Did I skip one? Oh, when we did this, I accidentally skipped point 3.4. Okay, so point number 5 is also going to Esondo. So that is where it was correctly captured in the control account, but I captured it to the incorrect side of Esondo's account. Now, what we said is when we have a credit note, we generally debit your creditors control to reduce it. Now, in this case, I would have debited it. Now, to correct that mistake, I would have to add minus the 590, which is the first correction, and then I have to minus 590 again to now reflect it onto the correct side. Let me just show the calculation here. So you can either do 590 times 2, or you can show the two 590 separate to account for that transaction. Okay, and there we've captured that transaction as well. Then number 6. We said for this one, we're going to charge interest now on the overdue account for C Cornwall, but only for the 4 months it was overdue, and it's on 18,000 Rand. So we will have to account for it both in his list as well as the creditor's control account. Okay, now how do we actually work that out? You take the 18,000, you multiply it with 12%, then you divide it by the 12 months because I want to work out what is the percentage per month. And then I multiply it with the 4 months that it is outstanding to get to that amount. Okay, so that is the calculation. And then the amount is 720, which I add onto my interest expense. So I will add that amendment also to the interest expense general ledger amount. Okay, so that's been accounted for. Then 3.7 is we've got a debtors balance, a negative debtors balance for H Mortier, but we want to move it to our creditors balance now. So what we have to do is we add 800 to H Mortier's account here for their balance. But we also need to reflect it on our control account. So your contra account is debtors control. You would say general ledger and you would add 800 Rand on there. So let me just highlight that entire transaction red. Okay, so that's how you correct it up there. And then the last transaction is the RD check that was incorrectly taken to our creditors control account. So if we go to the creditors control account, this here should be deleted. Okay, so let's quickly see. Strike it through. Okay, so that entry should in fact be taken out altogether. Okay, let's see if there's anything else that we need to account for. Okay, let's start with the creditors listing. Okay, so now what happened is we have now adjusted these balances. So now you do your post adjustment. So you take the pre-adjustment plus the adjustment and you add them up. So that means the creditors listing based on the adjustments, the new balance for S&P is 26,320. You've got 25,320 for C Cornwall. You've got 13,200 for H Mortimer, and you've got 25,730 for S Zondo, which makes the new balance for all your creditors per the creditors listing 90,570. Okay, so that is what we're working towards for your creditors listing. Now what you have to do in this, we've adjusted all of these things. So now we have to go update these balances. So this would now be the 5,690. Our bank remains the same. Here we've got a settlement discount received. Now when we get a settlement discount received, it is not on the credit side. We actually reduce our creditors journals. So this one here should also be removed from that side, and we add it onto our trading inventory and that account, because this is where we generally account for any trade discounts we received in a general journal. Okay, so this would also then be changed to 720. Okay, we've removed the bank account. That should not be reflected in there. What will, however, change is we will potentially have to change the opening balance based on the amendments. Okay, then we've now adjusted this balance, so it's now the 26,000. We subtract the 1,200 and we add the 4,320 to get to the new sundry purchases amount. We've removed the settlement discount of 500. We've added our debtors control of 800, and our interest needs to be updated with the additional 720, which will give us 1,200. Now, with a creditors balance, the creditors would generally be the biggest one. So how we're going to work it out is you will add the opening balance, the sundry purchases, the interest expense, the debtors control. Should give you a balance. And then this side should be the same. But what we know is that the balance carried forward, let's see where, okay, so the balance or carried down based on our creditors listing should be the following. Should be the 90,000. And this would be 1 July 28. Okay, so based on the creditors listing, we know that the balance should be 9570. Okay, now if we add the sundry returns, the bank, the trading inventory, and the balance, we actually get an amount of 144,980, which means there is a difference which needs to be adjusted in our opening balance. So the opening balance here was actually incorrect. So there's a 3,600 shortage up here in the opening balance based on the adjustments. Okay, so because they don't tell you necessarily when this mistake occurred, it means some of the mistakes was already in the prior month opening balances here. So you have to go and adjust the opening balance in order to balance this. Okay, so this is the only trick from your normal account is when we do corrections, your opening balance of your control account will not be accurate. Otherwise, your account won't balance. Okay, and that is how you adjust your creditors list. So you show your calculations, then you do the adjustment amount, you add it to your pre-adjustment balance to get your post-adjustment balance. This total here is what your balance should be according to your control account. And then you go and adjust the individual transactions based on the additional information. And once you finish that, your last step is to balance that account by adjusting the opening balance to correct the control account. Okay, do you guys have any questions on what we've done in question 2.9? Do you have any questions?